Hey there, and welcome. So every single day, we're just bombarded with economic news, right? It's all these numbers and acronyms, and it can feel, pretty overwhelming. But what if you could actually read it all like a pro? Today, we're going to pull back the curtain on the U.S. economic calendar and turn that flood of data into a story that actually makes sense.
I mean, you hear these terms on the news constantly. They move the stock market, they get politicians talking, and they have a very, very real impact on your wallet. So how do we make sense of it all? Okay, let's dive right in.
The best way to think about the economic calendar is kind of like a weekly health report for the U.S. economy. Seriously, it's a schedule of data releases that gives us a regular checkup on everything, from jobs and housing to overall growth. This is the exact tool that professional investors and economists are looking at every single day.
And here's a real snapshot from the calendar. See? It shows you the report, when it's coming out, and then two absolutely crucial columns, actual and median forecast. And let me tell you, that median forecast column, that's where the real action is.
So what exactly is that median forecast? Well, think of it as the market's collective best guess. Experts get surveyed, and their predictions are all averaged out to create this one single number, this expectation. So before any official data is released, the market already has an idea of what it thinks the number should be. And this right here is a perfect example of the most important rule of all. The real story isn't the number itself, it's the surprise. It's all about the difference between what everyone expected and what actually happened. In this case, fewer people filed for unemployment than predicted. That's a positive surprise, and that's what makes headlines and moves markets. So let's move on to our first major theme and see how this all connects. Because honestly, nothing tells us more about the immediate health of the economy than the job market. It's like the first pulse we check, and we check it often. Let's just zero in on that number for a second, 230,000. What this represents is the number of people who filed for unemployment benefits for the very first time that week. This makes it one of the most up-to-date economic indicators we have. It's practically real time. And interpreting it is pretty straightforward. A number that's lower than expected, like the one we just saw, well, that suggests the job market is healthy and companies aren't laying people off. But if you see this number start spiking week after week, that can be one of the very first warning signs that the economy might be slowing down. Okay, next up, let's talk about housing. The housing market is so much more than just buying and selling homes. It is a powerful, powerful engine for the economy. It reflects how confident people are feeling, and it's a huge sign of long-term investment. And it all starts with confidence. This number, 32, it comes from the Home Builder Confidence Index. It's a survey that basically just asks builders, hey, how are you feeling about the market? Any number below 50 suggests that more builders feel like conditions are poor than good. So essentially, this number is their mood. And that mood, that confidence level, it isn't just some abstract feeling. It directly predicts what's about to happen next. It tells us whether or not they're going to start putting shovels in the ground. And we can actually watch that story unfold right here in the data. First, builders apply for permits. That's the plan. Then we see housing starts. That's the action, the construction actually beginning. And finally, we get new home sales. That's the result. You see? Each number is just another chapter in the very same story. All right, let's shift gears to a topic that affects every single one of us, no exceptions: inflation. This is all about your purchasing power. How much your dollar can actually buy. Now, you've probably heard of the CPI, the Consumer Price Index, but the one that the Federal Reserve, the people who set interest rates, the one they watch most closely is this one, the PCE Index. It's a super broad measure of what Americans are actually spending their money on. So when you're looking at inflation, you'll often see two numbers. Right here, we have the main PCE at 2.6% for the year, and then something called core PCE, which is a little higher at 2.9%. So what's the deal? What's the difference? Well, core simply strips out the prices of food and gas. Why? Well, because those prices can swing like crazy from month to month because of things like weather or global politics. So by removing them, economists feel like they get a much clearer, more stable signal of the underlying inflation trend in the economy. So we've looked at jobs, we've looked at housing, we've looked at inflation. Now let's zoom all the way out to the big picture, the final report card for the entire economy, GDP. This number, 3.1%, this represents the annualized growth rate of the U.S. economy in the second quarter. This is the big headline number that tells us if the economic pie is getting bigger or smaller. To put it simply, gross domestic product is the market value of everything produced inside a country's borders. A positive number means we're growing, creating more jobs, more innovation, more wealth. A negative number, well, that's literally the definition of a recession. Okay, we have covered a lot of numbers, but the biggest question is still just hanging there. Why does any of this matter to you? How does all this stuff connect back to your everyday life and your personal finances?
Well, it all connects directly back to your wallet. I mean, think about it. High inflation, your dollar buys less at the grocery store. Strong GDP, that can be great for jobs and for your investments. Rising jobless claims, that's a warning sign. And Fed decisions on rates, that affects your mortgage and your savings account. It all feeds back into the financial decisions that shape our lives.
And this is exactly how it all comes together. The media takes these individual data points, like strong growth, but also rising inflation, and they weave them into a single headline. You see stories just like this every day, and now you know the actual numbers behind them. So at the end of the day, the economic calendar is so much more than just a schedule. It's a narrative. It's a real-time story of our jobs, our homes, our costs, and our growth. And learning how to read it gives you the power to understand that story for yourself. So I'll leave you with this question. The data is out there, and it's updating every single week. Now that you have the tools to decode it, what story is the economy telling you right now? Thanks for joining us for this explainer.